And if you've just joined us, you're watching Stock Watch. Joining me in studio today, Jean-Pierre Verster from Fairtree Capital, Gerbrand Smits from NEFG Fund Management. Don't forget to send through your questions. You can send stock and your questions to 41392. You can also email us on stockwatch@bdtb.co.za. Before we get started, though, a quick recap of how the local markets ended the day. And a rebound in resources stocks left the JSE almost 1% higher. The Resi 10 jumping 1.3%, while industrials were just over 1% higher, the FTSE 15 adding 1/3%. Gents, a very good evening. So, delayed reaction to the French elections. What was driving us today, Jean-Pierre?
Yeah, look, when it comes to daily sentiment, we can pick a few reasons, but it seems like people are happy that the French election did go down well. China had a bit of a reprieve in terms of commodity prices, not keeping it to go down. So people felt good today, and therefore there were more buyers and sellers, and therefore prices rose. So
I thought you always had the same amount of buyers and sellers.
But they don't have the same amount of money. Still.
Oh, okay. Gerbrand, we also saw, I mean, I think that the US is a bit mixed at the moment, but we did have the S&P and NASDAQ both at record intraday highs for a second day today. So it looks like the US markets are also quite happy at the moment. So I mean, as US earnings season coming to a close, we've had the VIX at record lows as well.
Yeah, you had positive sentiment globally. You saw, if you look at the numbers that came out from companies in Europe over the last earnings season so far, I think the record stands at about 63. That's actually surprising on the upside with revenue and earnings. And only about 29% that's actually been disappointing. So it looks like the companies are doing okay, especially in Europe. The States as well, the recent earnings do signal that there was actually, I think, close to a 15 or 18% growth in some of the sectors on earnings front. So yeah, not too bad. We're a bit concerned about valuations, but that's what value fund managers normally do. Get worried when you got 30 PE, CAPE ratios, etc. On some of these global stocks.
Are you worried about valuations? Naspers, for instance, up 3% today. So that must give us a pretty hefty valuation.
Yes, strangely enough, that's one where I'm not as concerned about the valuation. Tencent is going to report in a few days. People are expecting a very strong result from them on the back of gaming, and especially Honor of Kings is now being rolled out outside of China, which is more than half their gaming revenue. But I agree with Gerbrand that in general, valuations are high. So it really makes it difficult if you are a stock picker like we are to go through this haystack of overpriced companies and look for those which valuation are still reasonable. It is like looking for a needle in a haystack at the moment.
Right. I mean, I guess we'll be hearing with your stock picks later in the show where you are finding that value. Any reason for that gain in Naspers today, Gerbrand?
Yeah, I think Tencent was up, and everybody's probably anticipating these earning numbers, and the currency weakened a bit overnight, as far as I can remember, from about 2 days back. So if you look at the sum of the part valuation on that, I think it's close to about 3,600 at the moment. About 3,200 or 3,300 is just a Tencent share that they own 34% of Tencent. So I think still a discount of about 40% on yesterday's price when we did the calculation. And I think that's why Jean-Pierre and most fund managers in South Africa are still happy to hold some of them.
Hold, or would you be buying, or would you be waiting for a pullback?
I'm waiting for the Tencent results, and one can on a daily basis track what the value of the Tencent holding is on a per share basis of Naspers. And sometimes when it gets to a very wide valuation, Gerbrand mentioned the 40%, so it gets you, say, 45. If you add up all the bits, then a lot of the times one can buy it. But in general, rather than on a day-to-day basis track the discount, I'm more interested in how the bits, especially Tencent, which is by far the biggest bit, might do in the next 1 to 3 to 5 years. And that is where the optimism still is.
Okay. Well, let's take some questions. Here's one about Shoprite. There's been a lot of negativity around Whitey Besson's sale of a stake in Shoprite and the company buying those shares. Should I short Shoprite? Would you short Shoprite? Gerbrand.
It's a difficult thing to short any of those good quality companies. I certainly won't. It's been standing still for quite some time. It's been doing okay over the last 6 months. But if you look at the valuations, I don't think it's too stretched at the moment. If you look at the latest growth numbers and revenue growth numbers, they were actually doing probably the best in that specific sector. And they're still performing, if you take GARP style investing, they're still performing at decent P multiple to what their growth are at the moment. So I would certainly not short those shares at the moment.
Okay. Jean-Pierre?
I had a look at this whole controversy of the shares, and the put option agreement was entered into in December 2003, and the share price of Shoprite was then below 10 Rand a share.
Oh, and it's now 200 Rand.
So it's gone up more than 20 times. So
Yeah.
that is exactly what Gerhard is saying, by saying that if you buy growth at a reasonable price, sometimes in the short term it looks expensive, but the growth catches up with the valuation, and then all of a sudden the short doesn't look that clever. So above 200 Rand per share, you could short Shoprite with a view that you should very quickly maybe cover it if it goes to 190. But if it doesn't get to 190, time is the friend of a good company. And over time, the valuation of Shoprite, where today you might say fair value is 190, a year from now it might be 220.
Yeah.
So if it doesn't drop, you are caught in that short position while the share keeps on rising, and it's not clever to short above average quality companies, and I would definitely say that Shoprite is above average in terms of quality.
So be careful with
Yes.
that one. And the panel's view on Alexander Forbes and Hulamin, and that comes from Leo. And does the panel have a view on Alexander Forbes?
Yeah, look, they've been restructuring and selling off bits and pieces. It's a difficult environment for them at the moment in South Africa. We all know of retrenchments and so forth. It's not expensive where it are, or is at the moment. We're still sitting on the sidelines and waiting for the next year to see how the results will pan out going forward. So yeah, still sideline for me at the moment.
Okay, sideline with Alexander Forbes. And for you, Jean-Pierre?
Well, it's a new CEO that's...
It's Andrew Darfur, yeah.
Yes, and for quite a few months now, but still we're waiting to see the new unfolding of the strategy, more focused on
And he's been a bit
Pan-African
camera shy
strategy.
so far.
Well, he did quite a few engagements with the fund management community in the few months after he joined. So he was probably very busy at the beginning, and therefore now's the time to then get stuck into the actual operations. But I want to see this new strategy because the core market, the South African market, is facing some headwinds. If you look at the flows going into pension funds, those flows have effectively stopped, and we have more outflows than inflows in the pension fund industry as more people retire versus new jobs being created and new people contributing to the pension fund industry. So because of this negative flow situation, it's not great for a company like Alexander Forbes, which really makes its money from more flows, more assets under management.
Yeah.
On the back of that, they'll cross-sell and do short-term insurance and other type of services, but you really need a growing pot of AUM in the pension fund industry, and that isn't happening. So tough time for Alexander Forbes at the moment.
Okay, and how about Hulamin?
Hulamin is quite linked to the rand because they export aluminium, and it used to be more commodity type aluminium for local usage, and now more specialized aluminium that they export. The rand has got a big component to that. They're trying to hedge it by both importing aluminium and exporting aluminium and just capturing the conversion margin, but still they prefer a weakening rand. And the rand has weakened in the last month or so, but if you look over the last year, it has strengthened. So very tightly linked to the rand. If your view is that the rand will weaken going forward and you think they can hold on to that conversion margin, then it looks reasonable quality. But the aluminium industry as a whole is a commodity industry. It's just not a company that I like to invest in given the sector.
Yeah, I seem to remember that the most recent results were pretty good, Gerbrand, but that followed a pretty poor set of results a year before that.
Yeah, look, they've done a lot of things right over the last year or two. So if they've gotten their energy mix right for their production sites, etc. I know they went over to a lot of LPG gas and so forth, let Eskom dependent, where they had a lot of trouble with Eskom shutdowns and those things at one stage. And they had once-offs where they actually had benefits from a tax beneficiation and so forth in new production and so forth. So I think they've done a lot of things right over the last year. And I think Jean-Pierre is correctly on it's a commodity, it's a low-margin business, it's a volume business, and it's linked to the rand at the moment. It is very cheap. It's at a 5.5 price multiple, PE multiple at the moment. We liked it below 5. I think where it's now, we're probably neutral in it. But there is risk on it if the currency starts strengthening again.
Okay, so Andrews sent through, first of all, an observation. He says there's something wrong with our ticker, and the prices appear to be wrong in our ticker, so I do apologize for that.
As long as these tickers are okay.
Yeah, as long as your tickers are working, but unfortunately our ticker, we are having problems, and it is a vendor that feeds that information through to us. But then he does have a question as well, and he asks why the DBX US tracker has not performed in line with the deterioration of the rand.
Well, it should have, because the S&P 500 is also up. So unless it might have gone ex-dividend and you don't see that.
Or unless our ticker's just wrong.
Or the ticker is wrong again, exactly. So it must be the source of the pricing that he's looking at, because at least let's take the last month. The rand has weakened, the S&P 500 is up. So the price of the instrument should go up in rand terms, even those two.
Because I mean, that's the only two factors that influence it apart from...
If you take it over the last year, you might see it flatlining, because you got the currency that strengthened 17 or 18%, and the US market probably did similar. So that's probably why he's referencing.
Okay, so over a year it probably wouldn't have done well, but it would have done well this year.
This month.
Or this month. Okay. So, the panels, why are all your panels generally against shorting? It's a great way of making money when the opportunity occurs. So again, a statement.
I'm not against it. I'm a hedge fund manager. I actively short shares.
Yeah.
It's just that it is more dangerous and it needs more attention. It is more specialized. You can lose more than the money you put down, because it implies leverage, because shares can go up more than 100%, meaning you can lose more than a margin of your nominal value of the position.
Yeah.
So it's not for everyone to try at home.
And as you said, you'd be wary about shorting quality shares.
Yes, and that's a personal preference. Other people might think that in the short term, if a quality company gets expensive, they're happy to short it with a view that in the short term, the price will correct closer to fair value and they can cover the short. I'll leave that to them to do. I prefer to short below quality average companies, meaning commodity companies, companies that don't have a wide moat, a wide competitive advantage, don't have pricing power, where sometimes they don't even look that expensive, but over time they don't create value. And those, for me, are the type of shares that I look to short. And it's not just because I think they're going to zero. It's a good hedge in terms of hedging the risks of the long part of your portfolio. You're long certain shares, short others, and then as the market moves along, sometimes you get some generation of income and returns from the long shares. Sometimes when the whole market falls, thank goodness you got some shares that you shorted, and then you get some return from the shorting of shares. So done correctly, it can enhance returns. But it is more specialized, and you probably need to be a full-time fund manager to do it. I don't think it's something for the typical man in the street to go shorting the whole time.
Your thoughts on shorting and long-short strategies, Gerbrand?
I think 100% correct. I mean, we only unit trust, so we long fund managers.
Yeah.
We're not that big that we need to short shares to get to the nominal of zero in our portfolios. So on a unit trust basis, you probably don't need to short any share unless you become a 700 billion fund manager that needs liquidity on some of the stocks and want to share out, short out some of their positions on that basis. But yeah, on the hedge fund game, I'm on the same boat. It's very dangerous to. We had a 5-year bull market in momentum type of stocks before 2016, and if you were shorting any quality company that had any rand hedge component, you would have probably lost your socks over that 5-year period.
Yeah.
So maybe it's just what we used to over the last 5 years, but my preference would be the same as JP's on the front. Low quality shares, that's probably intrinsic value is lower where it's now, overpriced, etc. Overpriced shares, we thought Naspers were expensive. I mean, and it just keeps on growing on the Tencent side by revenue of 50% and 50% on the earnings front. So to short a company like that on a 50 PE is certainly dangerous. But I mean, if you go Benjamin Graham's book, you would short that share any day, and that might be very dangerous.
Okay. So this viewer would like to know the panel's view on buying Astoria or Ethos Capital as opposed to just buying the S&P 500 for offshore exposure.
So Astoria gives you a portfolio of offshore listed shares, some private equity as well, so it's not only that.
And there's a cash holding also, isn't there?
And some cash as well, but it's a closed-end vehicle, and it's trading at a discount, and it should probably trade at a discount, and there's some fees in the structure as well. So if you just want the pure return of the S&P, rather buy the type of index fund that you spoke about earlier, whether it's the DB1 or a different provider. When it comes to Ethos, well, most of their investments are actually based in South Africa. So you're not buying into the company, the private equity company, you're buying into one of their funds, on balance sheet investments effectively. And it's those packaging companies and other type of companies in there that will drive the valuation, but it's also a closed-end fund that will trade at a discount. So I would rather go for the ETF for the reason that the question was asked.
Would you prefer to go for the ETF as well, or the S&P or the
Yeah,
Deutsche?
you're looking at other fund managers' views on those, and our valuation metrics differ from what anchors are with Astoria. So we would probably build our own offshore portfolio, or if we want S&P type of returns, we'll buy the exchange traded fund. Look, in the offshore markets, the sectors are much more healthy, balanced, and so forth. So it's almost easier to buy exchange traded funds on the offshore market to actually mimic those returns. In South Africa, it's easy. You got various sectors that got massive overweights and so forth. So it's difficult. I don't like exchange traded fund locally. I think in the offshore market, it's certainly a nice tool to have.
Okay, well, we're going to a break, so keep sending through your questions via SMS to 41392. You can also email us stockwatch@bdtb.co.za. We'll be right back.